Hello again, it's Eric here, and we are going to be talking about crude oil today and the setup inside the evolution of the trade, which is the discipline that we use within our blog, and the subscribers should be adhering to it. If we open up the subscription matrix and quickly highlight crude oil, which is proxied by the USO ETF, we can see that crude oil has been down for 12 months and has produced a 170% return. First thing I do is establish the phase. I go over to column B. It's empty, so we know it's A and E phase, which is alignment and energy, also opportunities. We are looking for anything that would allow us to generate a reset, because that's what's coming next. Now I know that there's a lot of calls that are bullish on crude oil, but it just does not make sense within the evolution of the trade because the primary trend is still down. I don't know why you want to buy against it. It's a dangerous move. You do want the primary trend to flip before you go long. If we look at the primary trend itself through these columns here, we can see that crude oil has been down for 12 months. It's got a price cycle of 1.8 and a time cycle of 0.1. which suggests that these are standardized cycles to zero, so the price movement or the 170% return is pretty substantial. It's not extended, but it's approaching that. So this is why crude oil's decline has slowed. It's kind of pushing against a wall here. If we look at the daily trend, we know that we have a intervening up rally within the primary downtrend. That's what people have jumped on and started to call a new bullish cycle. But that's up against a down weekly and a down monthly, and that's dangerous. It's not quite extended, or it's above its mean. As we can see, these numbers are blue because they represent readings above zero, but not quite approaching extended. So we know that the numbers are climbing, but there's really no play in crude oil. I would not be chasing it and buying it. I would not suggest that crude oil is bottoms. I wouldn't say anything. But that doesn't stop people because there's a lot of beliefs and gut instincts around there. I follow my discipline and I suggest you do the same. So A&E phases, we know that leverage, which is energy, we should take a peek at that. WA is 39, DI is minus 51 and minus 48. That's a pretty sizable negative energy build, of which we should take a closer examination of that. So let's close this out. Let's open up a subcomponent of the matrix which gets posted into the cloud, into the charts, and we'll take a look at crude oil here. And crude oil pops up and we see here's the numbers 48 and 51 down here. These are the DI and DI2. But we can see crude oil has established 1, 2, 3 waterfall declines, of which we're recovering now after one. These setups tend to follow an energy build in threes, 1, 2, 3, 1, 2, 3, which means that as you get the first bounce off the low, you tend to get several blocking domes, which limit the rally, because at best you're going to be in cause building here, not a bull market. I would not call this a secular bull market, a transition to a bull market. There is no way. I don't know why people are doing that, but that's up to them. This is just a bounce for now, which we've seen 2 blocking domes. So similar setups, saw 1 or a series here, 3 of them here. We've seen 2 of them, of which DI is pretty low and DI2 is pretty low. DI2 is the yellow series, which means you're pinned pretty close to the bottom. As the price rallies here, if this DI stays pinned down here, the chances are that this market will not be able to break out of a trading range, start to increase. And really the play here from an energy standpoint is to wait for a reset, and that's what we're doing. If we want to take a look at how some of the energy builds and how the computer establishes the difference between, right now we're looking at both of them, but in the bearish, as we select that, we can see how the bearish energy builds are these white highlighted boxes and how they form, and they cap price, they roll over. They create these rolling domes, blocking domes, but then eventually they cause a cascading decline of the waterfall. So there's the bear, here's the bull, and you can see most of the time the support zones within cause building cause and generate rallies. The unusual part of this one is that there was no highlighting down here to generate a rally within the current waterfall. So the previous ones saw some type of build which then powered a reaction. We did not see this in 2020. I think oil is more vulnerable than people realize, but it's probably going to take time. So the play for evolution of the trade followers is to hold your core short position. It's probably not going to add on right away, but as the number of blocking domes build up, the chances of a reset start to pick up. And ultimately, when the computer establishes a reset, creates a viable one, it will be an escalation point against the short position. So that's the end of this review. Take any comments that you want. You can send them to me, or you can put them under the comment section of this video, and we'll go from there. Till then, have a good day.